If you're still spending hours manually categorizing transactions, chasing receipts, and typing up financial summaries that no one reads until tax season, there is a better way. AI has hit the accounting and bookkeeping world hard, and the professionals who are adopting these tools are handling more clients, making fewer errors, and doing less of the soul-crushing manual work. Let me show you what's actually out there. Welcome back to Node Pulse. Today we're going deep on AI tools for accountants and bookkeepers. Whether you run your own practice, work at a firm, or do bookkeeping as a side business, these tools are directly relevant to how you work. I'm covering the best platforms, the most impactful use cases, and how to evaluate what's actually worth adopting. Let's get into it. Let's start with the most fundamental shift: automated transaction categorization. Traditionally, a bookkeeper goes through bank and credit card feeds and manually assigns each transaction to the right account category. It's tedious, repetitive, and for busy businesses with hundreds of monthly transactions, it's time-consuming. AI-powered tools and platforms like QuickBooks Online, Xero, and FreshBooks have been doing transaction categorization using machine learning for a few years now, and they keep getting better. They learn your clients' patterns over time, where they spend, what categories those vendors fall into, and their suggestions become increasingly accurate. You're reviewing and approving rather than categorizing from scratch. That shift alone reduces bookkeeping time significantly. Xero, in particular, has been aggressive about integrating AI across its platform. Their analytics tools, powered by machine learning, can flag anomalies in transactions, unusual amounts, duplicate entries, expenses that don't match normal patterns. This kind of automated anomaly detection is genuinely valuable, both for catching errors early and for identifying potential fraud or misuse. For accountants who are the financial watchdog for their clients, this is a powerful feature. Let's talk about receipt and document capture. Tools like Dext, formerly known as Receipt Bank, use AI to extract data from photos of receipts and bills. You or your client snaps a photo of a receipt with a phone, the AI reads the vendor, amount, date, and category, and it posts the transaction. The days of shoebox full of crumpled receipts at tax time are numbered. Dext integrates with QuickBooks and Xero directly. HubDoc, which Xero acquired, does similar work specifically for bills and statements, pulling documents from vendor portals automatically and extracting the relevant financial data. For bookkeepers who used to spend significant time on data entry from physical documents, these tools represent the most immediate time savings. Payroll processing has historically been one of the more error-prone and time-sensitive tasks in accounting. Gusto and QuickBooks Payroll both use AI and automation to reduce errors, automate tax filings, and flag compliance issues before they become problems. Gusto in particular has features that remind you of upcoming deadlines, identify potential compliance issues based on employee classification, and automate state and federal tax filings. For small business owners who don't have dedicated HR, and for accountants servicing those clients, this automation is a meaningful risk reducer. Tax preparation is where accountants have historically had the most leverage, and AI is now augmenting that further. Tools like Intuit's AI features in TurboTax and ProConnect, and Thomson Reuters' AI additions to their professional tax software can suggest deductions based on transaction data, flag potential audit risks, and identify inconsistencies in returns. For complex returns, AI can surface information that a manual review might miss, not because the accountant isn't skilled, but because processing volume can lead to human oversight. AI doesn't get tired. For accounting firms specifically, practice management and client communication are huge time sinks. Tools like Canopy, Carbon, and TaxDome have built workflow management platforms specifically for accounting firms, and several have integrated AI features for drafting client emails, generating engagement letters, and summarizing outstanding work items. Carbon's AI drafting feature lets you write a quick note describing what you want to communicate, and it generates a professional client-facing email. When you're managing 50 or 100 client relationships, that kind of automation matters. The ability to respond to a client inquiry with a professional, accurate email in under a minute instead of 5 or 10 minutes adds up to significant recovered time over the course of a week. Financial analysis and reporting is another area where AI is changing the workflow. Clients want to understand their financial position, not just see the numbers, but understand what they mean. AI tools can take a set of financials and generate narrative summaries. Your gross margin improved by 4% this quarter, driven by higher revenue with stable costs of goods. Accounts receivable aging has worsened. You have 3 clients with invoices over 60 days. That kind of plain language financial narrative used to require the accountant to write it manually. Now, AI can draft it, and the accountant edits and personalizes. Tools like Fathom and Spotlight Reporting do this specifically for accountants using QuickBooks and Zero data. Accounts receivable and collections is another pain point for businesses. Pluto, Melio, and similar tools use automation to streamline payment processing, and some have AI features that help identify overdue accounts and trigger automated follow-up communications. For bookkeepers managing AR for clients, having a tool that automatically sends payment reminders and escalates based on aging removes a manual task that's easy to forget. Audit preparation and support is an area where large accounting firms are starting to use AI for sampling, risk assessment, and documentation review. Tools like MindBridge AI Auditor analyze entire transaction populations rather than samples to identify anomalies and high-risk items. For firms doing audit work, this kind of AI-assisted analysis improves both efficiency and the quality of risk identification. Continuing education and technical research is something accountants need constantly, given how frequently tax law changes. AI tools like ChatGPT or Claude are being used by accountants to quickly get plain language explanations of tax code changes, research specific scenarios, and draft technical memos. The caveat, and this is important, is that AI models can make mistakes on technical tax and accounting questions. You always verify against primary sources before advising clients. Use AI as a research accelerant, not as your final answer. The overall picture is this. AI in accounting is best used for the high-volume, repetitive pattern recognition tasks, categorization, data extraction, anomaly detection, report generation, client communication drafts. The judgment-heavy work, strategic tax planning, complex financial analysis, client advisory, that remains the domain of skilled accountants. What AI does is give you back the hours you were spending on the mechanical work so you can do more of the high-value work that clients actually pay a premium for. For bookkeepers running solo practices, the tools that have the highest immediate impact are Dext for receipt capture, QuickBooks Online or Zero for AI-assisted categorization, and Fathom or Spotlight for financial reporting narratives. Start there. Master those 3, then layer in additional tools as your practice grows. The competitive picture. Here's the business reality for accounting and bookkeeping practices. The firms that adopt AI tools are handling more clients with the same headcount. That means they can either grow revenue without proportional cost increases or offer more competitive pricing, or both. Either way, they have a structural advantage over firms that haven't adopted. For solo bookkeepers and small practices, this is genuinely exciting. You now have tools that allow you to handle a client load that would have previously required hiring. One experienced bookkeeper using these tools can serve 30 to 50 clients instead of the traditional 10 to 20. That's the difference between a comfortable practice and a genuinely scalable business. One caution: AI in accounting has real power, and with that comes the responsibility to verify. The tools I've described are good, some are very good, but they make mistakes. Misclassified transactions, incorrectly extracted receipt data, anomaly flags that aren't actually anomalies. The AI accelerates the workflow. Your professional judgment is still the quality control. The practices that get in trouble are the ones that treat AI outputs as final rather than as starting points. Review, verify, exercise judgment. AI gives you more capacity for professional work. It doesn't replace the professional judgment that makes the work valuable. The accounting profession isn't going away. But the accounting professionals who thrive in 2026 and beyond are the ones who use these tools to deliver more value with less friction, for themselves and for their clients. Subscribe to Node Pulse for more practical AI tool breakdowns. See you in the next one.